income taxes. This is the topic we want to deal with this night. IAS 12 always talks about two things. The scope of IAS 12 is about current tax and the deferred tax. Current tax and the deferred tax. This is IAS 12. There are so many taxes we pay to governments. But the one IAS 12 is concerned, it is the current and deferred tax. Please, a minute. Don't be annoyed. A minute. Sorry, please. Don't know what is happening to my system this night. My stomach is just... Okay. Let's go back. It's about current and deferred tax. The tax that goes to the P or L. The tax that goes to the P or L is the addition of the current tax and the deferred tax, which is giving us tax expense. The tax expense you are seeing, our P or L, for the current tax, what do? We debit P or L, then we correct current liability credits, although there is an exception to this. The same thing for deferred tax. But deferred tax will go to non-current liability as a credit, then we debit P or L. This is what IAS 12 is saying. But not too much issue on current tax. There's not too much issue in current tax. Even at this level, I'm not expecting ICANN to test deferred tax and to test current tax at your level, only deferred tax. But we will do the two in case they are tested. We look at last night's question, it was only deferred tax. And for all the years I've been seeing in CR, I've not seen current tax. But at FR level, they test current tax a lot with the two deferred tax. Okay? But for current tax, we don't have issue, as I said earlier. We just need to know the formula to calculate current tax. And what is the formula we use in calculating current tax? As is given by IAS 12. The formula is very clear. It said I must have accounting profit. What is accounting profit? Profit that we derive after lessing all expenses except tax. So accounting profit is just like profit before tax. Tax is not deducted yet. I will now add back all disallowable expenses. I will add them back. Immediately I add all disallowable expenses, I will less allowable. I will now say less allowable expenses. Then I will also less not taxable revenue, like frank investments and co. This will now give me taxable profit. So, in any question to calculate current tax, they must give me accounting profits, which I will use to derive taxable profit. I will now multiply tax rates on it. Tax rate is always a percentage. Immediately I multiply the tax rate, I will get current tax. Thereafter, after I've gotten my current tax is being affected by under or over provision for last year. So last year, we can have over provision. What do we do to over provision with less? And it's going to be seen in the credit side of the trial balance. They are under provision. What do we do to the under provision we add? That's all. This is all about current tax. What you need to know about current tax. This is all about the current tax. What we are expected to know. Current tax. Now, what about deferred tax? What brings about deferred tax? Different in view. What brings about deferred tax? What brings about deferred tax is different in view. Now, deferred tax. It is in view, difference in view of who? Accountants who prepare the accounts and the tax person. Accountants prepare accounts, they will prepare, while the tax person will adjust. Tax person will adjust the accounts. He doesn't prepare accounts. Accountant will prepare using IFRS and IAS, while the tax person will adjust the account using tax law. Tax law, which one is superior? Tax law. That is it. Now, this one we say depreciation. Why this person will say capital allowance? This person will say accounting profit. This person will say tax base or tax written down value. So this person will say carrying amount, accountant, carrying amount item is recognized in the financial statement. Why this person will say carrying amount, this one will say taxable profit. Why this one will say tax base or tax written down value. So we now have differences in our view. We have difference in our view. We now have differences in the way we see things. The differences cannot be of two types. It cannot be permanent difference and deductible and temporary difference. Permanent difference is a disallowable expenses. Don't forget, what do we do to disallowable expenses? We add them back. They are disallowable expenses. Why temporary difference can be of two types. It can be taxable TD or deductible TD. Now, what we have been saying since money does not make meaning. This is where it makes meaning for exam purpose. And that's what they tested last night. This is where it makes meaning. Taxable difference will lead to deferred tax liability. While the deductible difference will lead to deferred tax assets. Now, deferred tax liability occurs when the carrying amount, who use carrying amount and accountant, is greater than the tax base. It will lead to deferred tax liability. Carrying amount is greater than the tax base. Then, for deferred tax assets, when the carrying amount in the book of accountant is lesser than the TB, it will lead to what? Deferred tax assets. I must know these principles very well. That is what I need for exam purpose. One of those things I need for exam purpose. For example, let's say in our book, PPE is 100 carrying amount. The tax base is 80. Has it created a temporary difference? Yes. Is it a deferred tax liability or deferred tax asset? Deferred tax liability, how? Because the carrying amount is greater than the tax base. The carrying amount is greater than the tax base. Carrying amount is greater than the tax base. There's a temporary difference of 20. So when the carrying amount is greater than the tax base, then I will now multiply the tax rate. It will give me deferred tax liability. What I've been saying this morning, I'll be sent to your platform. This is it. Income tax is about two things, current and defer. For current tax, what do we need to do? How do we calculate current tax? The adjustment of the previous year current tax. For deferred tax is about temporary differences and movement in deferred tax to P or L from the temporary difference, which I will show you. Then current tax, how do we calculate it? Which I'll give you the formula. Accounting profit, add back salable expenses, less salable expenses and not taxable revenue to get taxable profit. I will now apply the tax rate to get to. But it can be adjusted for over under provision of the previous year. That is the current tax. Then for the deferred tax, different in view, which they normally also call a timing difference, that is the temporary difference. It can be permanent difference or temporary difference. Permanent difference is a disallowable expenses. While temporary difference can lead to two things, taxable difference and deductible difference. Taxable difference will lead to deferred tax liability and deductible difference will lead to deferred tax asset. What is deferred tax liability? When the carrying amount is greater than the tax base. Deferred tax asset. When the carrying amount is lesser than the tax base, it will give us deferred tax asset. We will look at it here now. What can we infer? What can be inferred? What we can deduce from IAS 12? What can be taken from IAS 12? 1. When the carrying amount of an item in the financial statement is greater than the tax base, carrying amount, accountant, is not greater than tax base, it will lead to what? Deferred tax liability. In where? statement of financial position. But when the carry amount of an items in the financial statement is less than the tax base, it will lead to what? Deferred tax asset in where? Statement of financial position. But when depreciation is greater than the capital allowance, depreciation now, it will lead to deferred tax credit or deferred tax income to P or L. Zero is the deferred tax income or so if I'm talking about depreciation and capital allowance, I'm only talking about deferred tax credit or deferred tax income to P or L. But when depreciation is less than the capital allowance, it will lead to deferred tax charge or deferred tax expense in the P or L. Now, this is the background of IAS 12. Part of the background, let me put it that way. Part of what you need to know as the basis. Now, there are several ways which questions can be tested, but we narrow it down to almost about 8 of them. Now, let's take the first one. Go to question 1, husband. Question 1. Husband PSC. Question 1. Let's take question 1 now. The material has been sent to you. Question 1 says, husband, but let's go to the requirements. The requirement says calculate deferred tax asset and liability. Immediately you hear deferred tax asset and liability, you are only talking about statement of financial position. To appear in the statement of financial position, balance sheet, for the next 3 years, and the debit/credit charged to the tax expense in the statement of profit or loss for the same period. Okay. Let's see. Let me write the solutions. Okay. Husband. Year. 1, 2, 3. SOFP. P or L. This is what he said. I will now go and do my deferred tax table. Before I do my deferred tax table, I need to know the rate of depreciation and capital allowance. Let's go to the question now. Set. Husband buy an asset for 150,000. Okay. Cost of the assets, 150,000. At the start of the financial year, the asset has an estimated life of 6 years and an estimated residual value of 30,000. Okay. He has given me the useful life of 6 years, and he has given me residual value of 30,000. Who is he talking about here? Accountant. Depreciation, 150,000 minus 30,000 divided by 6. This will give me 20,000, I think. 120 divided by 6, 20,000. Good. Then, how do you want us to grant the capital allowance? I'll go to the capital allowance. Capital allowance are available at the rate of 12% reducing balance basis and the tax rate. Oh, I cannot get my capital allowance on reducing balance basis. So, no problem. I'll now say capital allowance now. For the 3 years, year 1, 150,000 and 0.25. That is for the year 1. That will give me 37,500. Said on reduces balance basis, year 2, 150,000 minus 37,500 times 0.25. Can somebody help me with that?
That's 28,125.
28, thank you. 125. So for the year 3, 150,000 minus 37,500 minus 28, 125 times 0.25. What does it give us?
21,094.
21,094. That is it. After I've done that, I will now go to my deferred tax table. Let's see. Let's draw the table here. Also, okay, let me have my deferred tax table. I will say here. The carrying amount. Don't forget who use a carrying amount. Accountant. The tax base. Temporary difference. The tax rate in the question. Is it a deferred tax liability? Deferred tax liability or deferred tax assets? Draw a line. Year 1, we purchase an asset worth 150,000. We will inform the government that we have bought an asset worth 150,000 with evidence so that we will not explain tire. 150. We will now charge depreciation against capital allowance. Depreciation of 20,000 was charged, while capital allowance of 37,500 was charged, was granted. So 150 minus 20,000, that 130. 150 minus 37,500.
112,500.
So at the end of year 1, 112,500. We are not on the same page again. It has created a temporary difference. What is the temporary difference now? 130,000 minus 120, 112,500.
17,500.
17,500. Go to the question, what is the tax rate? 20%. Given by the government. Is it a deferred tax liability or deferred tax asset? Is it a deferred tax liability or deferred tax asset? We said when the carry amount of an item is greater than the tax base, it will lead to what?
Deferred tax liability.
Deferred tax. Right.
Thank you. What is the deferred tax liability we have now?
35.
35.
35. That is it. Closing balance of year 1 will be the opening balance of year 2. What we close with in year 1, we open with it. We say depreciation, capital allowance.
Open everything.
It has changed now at final level. We don't open everything again with the draft. We are still going to do all those things. They are very simple. 28,125. So 130 minus 20,000 will give me 110. Then 112,500 minus 28,125.
84,375.
84,375. Has it created a temporary difference? Yeah, you have a temporary difference. One 10 minus 84,375.
25,625.
25,625. See a deferred tax liability or deferred tax asset. Carry amount
Deferred tax liability.
Liability.
liability of how much now?
5,120.
5,125.
5,125. So the closing balance of year 2 will be the opening balance in year 3. Depreciation / capital allowance. 20,000 was charged. Yeah, we took 21,094. This will give me 90,000. 84,375 minus 21,094. What does it give us?
63,281.
3,281. So it has created a temporary difference. It has created a temporary difference.
26,719. 26,719. 719.
26. Is it also a liability because the carry amount is greater than the tax base?
5,344.
5,000.
344.
That is the end. This is the first requirement in the statement of financial position. Don't forget, deferred tax is a credit balance. It's not a debt because it's a provision. All tax is an estimate in the financial statement. We still don't know how much we are going to settle with. So we make provision by debiting the POL and credit our liabilities. So I'll go there. The requirements. The first one is 3, 5. Why the second one is what? Five, 1, 1, 2, 5. 5, 3, 4, 4. Five, 3, 4, 4. 5, 1, 2, 5. This is it. How do I get the one that goes to the P or L? To the P or L now. How do I get the P or L? I can easily do that. Or now say movement of deferred tax to P or L. Deferred tax to P or L. It can either be charge, another name for charge expense, deferred tax charge, or deferred tax credits. I will say here, 1, 2, 3. The opening balance and the closing. In year 1, What is the opening balance? It was not given. Nothing. What do we close with? It's increasing. 0 to 35. Charge. Charge of how much? 35. The closing balance in year 1 will be the opening year 2. What do we close with in year 2?
5125.
5125. So it's also increasing. It's a charge. Charge of how much? 5125 minus 35.
1625.
1625. Yeah, we have 5125 and we have 5344. See a charge of credit, a charge. Charge of how much now?
219.
219.
So that is it. So we have 2135, 1625, and 219. It goes to the POL. Three five 1625 219. That is the requirement. Now look at it. Case. In case the question want to play prank, they will only give you the depreciation year. 1, 2, 3. They will only give you the depreciation, engage the capital allowance. What is the temporary difference? The tax rates. I will now interpret. You see a charge or credit. Year 1, 20,000. Depreciation, 20. Capital allowance, 37,500. 20,000, 20,000. What is the capital allowance in year 2? Let's check. Year 2 is 28,125. And 21,794. Now, this is what the question will give me. The question will not say they buy an asset. This is what it will give me. It will see demand from me the same requirements. Has it created a temporary difference? Yes. 17,500. What is the tax rate? Is 20%. 17,500 times 20%.
35.
35. You see a charge or
35.
credit? You see a charge or credit? I will now interpret. Look at it here. Adjust. When depreciation is greater than the capital allowance, it will lead to deferred tax credits or deferred tax income. If they don't say credit, they say income in the POL. But when depreciation is lesser than the capital allowance, it will lead to deferred tax charge or deferred tax expense, because they don't call it charge, they say expense. In where? P or L. So go to the POL, charge. Then this one will give me 8,125, 20%. See a charge of credit, I will look at it. See a charge of credit. When depreciation is less than the capital allowance, it's a charge.
Yes.
Charge of how much now?
1625.
20% times
1625.
1625.
1625. Then this one will give 1094.
219.
I have gotten the POL. I cannot go to the statement of financial position. How do I get the statement of financial position? I've gotten the POL. Based on the requirements, say here, 1, 2, 3. I got the SOFP first, and the POL first before the SOFP. How much is the POL figure? First one is 35. 1625. Then we have 219. Now, how do I get the one at SOFP if I'm using this approach? Very simple. I'll just say, okay, year, 1, 2. Three. Opening balance and the closing balance. Opening balance in year 1 is 0, but we have a charge of 35. 0 plus 35 will give me the end, 35. 35 is the closing balance in year 1, will not be the opening. A charge of 1625 the closing balance in year 2 will not be the opening. A charge of 219, 5125 plus 219.
5344.
Yes. So I've gotten the statement of financial position. Three five F125 534. That's all. Any issue? Any issue? Ask me a question. So for now, you must be able to interpret this very well. What can be inferred from the standard IAS 12 on different tasks? These was 4 things. It means if I'm talking about different tasks, asset or liability, I'm talking about statement of financial position. And if I'm talking about the decision capital allowance, I'm talking about different tax asset, different tax liability. You are talking about balance sheet, SOFP. We are not talking about different tax credits, different tax charge. You are talking about P or L, period. Now, to determine the different tax that goes to the P or L, is two ways. The one that goes to the POL, the POL, which can either be charge / credit. Two ways. One, we can compare the opening balance against the closing balance. That is one. Two, analysis or interpretation of depreciation and capital allowance but provided that difference in rates is the only source of TD, temporary difference. That's all. If we can establish that, we are good to go. Is only source of temporary difference. If it is more than, you will see, you are still going there. We're just starting. But I'm very sure you will know it. Any question for me? Any question for me? Any question for me? Okay, in the absence of no question. So don't
Sorry,
forget we say
I want to clarify something. Good evening.
we
Please,
have
are you
clarified.
trying this determination, the how to determine the deferred tax or something? Are you trying to say that the first step here, the number one step here, was the first method we used, right?
The first method what?
You know, when we calculated the charge and all, we first of all had the first table where we did
The balance table. We use the
yeah,
balance to get our
yeah,
balance liability at the end.
exactly. Yes. So are you saying that this compare the opening balance against the that does it mean that that's referring to when we now did the movement of deferred tax to P or L?
We are comparing the opening balance against the closing balance. I will know
Yeah.
whether it is a charge or whether it is a charge or credit. That's what I'm saying. Or I interpret the and capital allowance. You look at question 4. When you
Okay.
check the question 4. Let's go to question 4. You check. You will see what I'm saying.
Okay, sir.
In question 4, you cannot approach it. Question can come that, oh, we buy an asset, they'll give you rate of depreciation and that of the capital allowance. Good. They will give you the two. Then the tax rate by the government. You can approach it either these two ways. You get the same answer. There's some question that will just give you the decision and capital allowance, like the one we are going now. Go to question 4. Start on PS. You will see they did not see the bar and asset. They did not say the bar and assets. They only give you depreciation and capital allowance. They will see as the same requirement from you. Same requirement with CBS to calculate the one that will go to the statement of financial position and the one that will go to the POA. They will see as you. It now depends, you must know how to interpret. You now know how to interpret what I've told you. This year against the capital allowance. You will now start so that you can make your judgments. That is what I'm saying. Let's take that question for more clarity. We will not spend too much time on it to go and check the rest because we have so many things to do. I've sent the solution to the blog, to the group, so that you can also look at it. Now, look at what they said in the question. Question 4. Let's go to the requirements. Calculate the deferred tax charge or credit. POL straight. You are telling me charge or credit. You are telling me our POL. Don't forget, this is not where we are going. We are just introducing the question bit by bit so that you get everything clear. Deferred tax is about the weight, the temporary difference, timing difference, different way we see things between accountant and the tax person. That should be at the back of your mind. What is the current amount? What is the tax base? Are they different? It will create a temporary difference. You agree with me with what we have done now so far? One of the source of temporary difference, what can make the view of accountants different is the rate of depreciation and capital allowance when they are not equal. You are still going to see, like last 3 or 4 days, when they ask what are the source of temporary difference and not the rest, all those things. You don't even need to cram. You will just produce them seamlessly. Okay, let's go to what the question says. Charge in the next 6 years, commencing from the year ended 30 June 2011 in accordance with the provision of IAS 12, and the deferred tax balance at the end of each year.
Hello, Mr. Kazim, sir.
Okay.
Sorry to disturb you. The first explanation you made reference on when you started the class, you didn't send that one to us. Sorry to cut you short. The one you said the accountant view and the tax man's
It's in the document. It's in the document.
Okay. Thank you, sir.
You're welcome, man. So let's read now. Look at the question. Let's read. The following information is given in respect of Stardom PSC, which is question 4 in your material. Stardom PSC. Good. The non-current asset consists entirely of plant and machinery. The net book value of this asset as at 30th June 2010 is 100,000 in excess. Does it pass message to you? In excess of the tax down value is 100,000 in excess. The net book value, the carrying amount, is now in excess of the tax down value. Deferred tax liability. No story. Of 100,000. Provision for deferred tax, all which related to the fixed asset giving difference. As at 30th June 2010 was 21,000. Temporary difference of 100,000. Deferred tax at the end of the year 21,000. Then I should know my tax rate without issue. And I said, see, the public capital expenditure forecast indicate that capital allowance administration in the future years will be year ended 30th June, December, depreciation and capital allowance. They give us the figure. And I said the following years, for the following years, capital allowance are likely to continue to be in excess of depreciation for the foreseeable future. The corporate tax is to be taken at 21%. They will start. They've given me the year. They've given us depreciation. The capital allowance. Then, as you create a temporary difference, I will ask, okay, the tax rates, you see a charge / credit to where? P or L. So what is the deferred tax position as at the end? You want to go say, okay, deferred tax balance, which can be asset or liability. In where? This one is charge or go, charge or credit goes to P or L. SOF. I will start. Starting from 2011, but I need to determine 2010. No depreciation, no capital allowance. There is a temporary difference of 100. Tax rate of 21. So you have a deferred tax balance at the end of 21. In 2011 now. According to the question, depreciation is 12,000. Capital allowance is 53,000. Yes, there is a temporary difference now. 53 minus 12,000.
41,000.
Tax rate of 21%.
8,610. 8,610.
Is it a deferred tax liability or deferred tax asset? We don't know. Is it a charge or credit to the P or L?
So deferred tax asset.
Expense is a charge.
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 Charge of how much now?
Eight six one zero.
I will not come here. 8610. What will now be there at the end? Opening is 21,000. 8610. 8610 plus 21.
29,610.
Or look at it. 53,000 minus 12,000. 41 is Temporary difference brought forward, 100,000. Add to the one for this year. 141 times 21%. 141 times 21%.
29,610.
He will give you this. 29,610 minus 21,000.
8,610.
8610.
Now, look at what you are doing. It's because you understand the principle, you can do it as you like. Year 2010. Opening. Closing. They did not give you opening in 2010. But there's a charge. Because we close with what? 21,000. Charge of 21,000. 2010, the close in 2011. 21,000 is the opening. We have a system charge after interpreting, or I can decide to get the closing first. Whichever way, I will still get the same answer. I can decide to get the one that will go to the POL, or I can get the closing balance. How do I get the one that goes to the POL? I know my interpretation. 53 minus 12,041 times 21%. I will interpret when the depreciation is less than the capital allowance. It's a charge. Charge of how much? 860. Or he has a temporary difference of 100,000 that leads to deferred tax liability based on the question. The excess, the net book value is in excess of the tax linear value. He brought 100,000 from the beginning, 2010 to 2011. For this year, we have a temporary difference of 41. I will add it to the 100,000. Why am I not minusing? Because it's a liability again that will lead to, it's a charge that will add to it. 41 plus 100,000. 141. 141 times 21% will give me the one at the end. 29,610. 29,610 minus 21,000. It will give me 8,610. This is 21,000. Any issue? Any issue? In 2012, depreciation, capital allowance, 14,000. Capital allowance 40,000. Has it created a temporary difference? Yes. Is it a charge of credit? I will interpret. 40 minus 14,000, 26,000. 26,000 times 21%.
5,000.
5,000.
460.
That is the charge. Or I said 26,000 plus 141. 26. 26 plus 141. What does it give us?
167,000.
That's 21. You will give me this. Minus this one here, you will give us this. Or you get your charge.
35,070.
To get this. What do you say, ma?
35,070.
35,000.
And 70. 070.
I minus this to get this. Or I use 21,000 direct. 26,000 direct. That's 21 to give me this. I will add it to it to give you
5,046.
this. That's all. Can we approach this with depreciation? If they say they buy an asset, they will not tell you they buy an asset. No asset is bought. They will just give you depreciation. This one has not tested before in ICAN exam. They will just say they buy depreciation capital allowance. You calculate. You will not start calculating. For 2013, $20,000, $20,000. That is 6,000. I can multiply the difference and go take it to your head. You see a charge of credit 16,000 times 21%.
That's 3,360.
Which one should we prepare? Which one should we be doing so that we stick to one? Which one do you like? $16,000 times 0.21.
That's 3,360.
3,360 plus 35,070. 38, 430. Or 167 plus 16. 183,000 times 21%. 183,000 times 0.21.
38,430.
About 30 minus 35,070 336 2014. What is depreciation?
40,000 and 32,000 capital allowance.
40,000. Capital allowance 32,000. Now, things has changed. Depreciation is now more than capital allowance. Depreciation is now more than capital allowance. What do we do? I will interpret it's a credit, not charge. 8,000 times 21%. 8,000 times 0.21. It will give me a
That's
credit.
1,680.
It's a credit. I will now say minus 38,430 minus 160. 38,430 minus 1,680.
36,750.
Or 183,000 minus 8,000. 175 times 21%. That is 6,750. About 30, 168 credit. Any issue? You can do the rest. Which one you mean? Okay, let's do one more. So you go and look at the rest. We have so many things. The solution is there. Send the solution. So we need to complete it, or you can complete that.
You can complete it.
Thank you. If you go to your documents, you will see the solution there. If there is any issue, this is my number and it's on the platform. You can call me at any time, any day. I am Kazim. I think some people know me here. They know how I operate. I
Yes,
used to
sir.
give a lot of assignments. I used to give a lot of assignments to students so that when you practice a lot, you will get your okay. Now let's take another question. Okay, let's go to question 19. Let's start with that. Question 19, Liberty PSC. Liberty PSC. Liberty PSC. Liberty PSC here ended is 31st of question 19. Liberty PSC. Liberty PSC here ended is 31st March. The balance in the current tax account on 1st April 2019 was over provision of tax liability of 12,000. The deferred tax liability of 1st April 2019 was what? 39,000. The provision for current tax for the year ended 31st March 2020 has been estimated to 291,000. At 31st March 2020, experts ascertained that the carrying amount of the net asset of Liberty PSC exceeds the tax day by 405,000. Liberty rate of income tax is 20% required. Compute the amount that must be reported in Liberty financial statement for the year ended 31st March 2020 and prepare a financial statement extract in respect of the estate. Okay? That's it. Computation of tax expense. For the year ended. Year ended 31st March. 31st March 2020. Please help us move, please. Current tax for 2020, they will give you, which the question has given us. To be 291. We say for last year, there is over provision. What do we do to over provision for 2019? Not under provision, over provision of 12,000. We less over provision. We now say for this year, we need to know if tax is either credit or charge. We don't know yet. I will now say movement in deferred tax. In deferred tax to P or L. Opening balance. According to the question, he said in 2019, the deferred tax as of 1st April 2019 was 39,000. What do they close with? For the closing balance? Said It does not give us, but it has given us information to calculate. As at 31st March 2020, expert has ascertained that the current amount of the net asset of Liberty PSC will exceed the tax bill by 405. Exceed the tax base, deliver tax liability, not assets. 405,000 times. What is the rate of income tax? 25%. To give me the closing balance. 105 times 0.25.
101, 250.
101, 250. I will now compare. You see a deferred tax charge or credit. It's a charge because it's increasing. How much is the charge? 101, 250,
250.
62.
62, 250.
I'll go up. 62, 250. That's all for the tax expense. Oh, yeah, submit. What does it give us?
Excuse me, sir.
Excuse me, ma'am, with you. Yeah.
There's a background noise from one of us, so it's disturbing
Is it from my
me.
end?
No, not from your end, from one of us. I don't know.
Can you identify that's one of us?
Okay, let me check. I think
What would you
Akuna.
send your homework to?
Yes. Oh,
Okay, they say
wait.
you are making noise.
Okay.
Mute yourself.
Okay, that's fine now. Thank you, sir.
Hello, sir. Sorry, sir. Good evening, sir.
Good evening, my Oga.
Sorry, sir. I don't know if this I'm trying to trace this question from the solution printout. I don't know what page. Honestly, I'm struggling with it. It's not well. I can't see
The
it.
solution
This
for
particular
this one we are
question. Is it on
doing.
the? Yes.
Liberty, let me check.
This account.
If it does not have, follow this one. I will send this one too.
No problem, sir. I'm just trying to find out if it's there because I can't trace it. But I'm following,
The
sir.
question
Sorry.
is there. Have you seen the question?
Sure. Yes. Now on the question printouts.
Is the solution you're not talking about now?
Yes, the solution.
Let me see.
Just at the previous one we did. Thank you.
Just like the previous one. But not all the question has solution there.
Okay, sir.
I'm trying to look for it. No, it's not part of it. Sorry for that. But I will send this one
Okay,
to the
sir.
platform. You can use this one too. So what is the total figure given to us now? What is the total figure now?
341, 250.
341.
250.
I'll now say the extra statement of profit or loss and this extra statement of financial position. I'll now say, okay, the extracted statements of P&L for the year ended 2020. Tax expense 341, 250. Extracted statement of financial position, current liability, current tax, which is 29. The non-current liability non-current liability. We have our deferred tax. What is the deferred tax at the end? 62,250. That's all. This is how it should be presented in the statement of what he's saying. Any question? Any question?
If we turn, Oga, if we turn this question a little bit and make that 405 to be
If I do
a
what?
deferred tax assets. I'm
Huh?
just painting a scenario. I'm just painting a picture. That
Okay.
405,000, the 405,000 is a tax liability. Let's say it's a tax asset. In this movement
Okay,
of
that
the
means
deferred,
the tax
yes.
base.
So in which case the
Okay,
tax
good
base is
idea. Good
higher.
idea.
Yes. So let's try
let's
it.
modify that question. That scenario.
Yes.
Good.
Yes, please.
Which is part of the question we are going to do. What we are saying now, we are still going to do it. As you have brought it up, we will do it now.
Okay.
In short, next thing we are going is what we have said now.
Okay.
But let's do this one so that we have a clue. Let me take it back to 100%. So what is the opening balance of my deferred tax?
39,000.
29,000?
39,000.
Yes. 39,000. Opening balance. Which is a liability. Abi? Credit
Yes.
balance.
Yes.
39,000. Assumption no. Closing balance. We now assume it's not a liability again.
Yes.
It's an asset of how much now? What do you get for
405,000.
the liability?
101,250.
1/250. This is not going to be a charge. $39,000 plus 101,250.
$140,250.
140.
250.
I'll now go to the POL. Tax expense in the POL. In POL. Current tax. 291,000. Over provision for last year of 12,000. Deferred tax credit. This is 141, Abi, not 14,250. 141.
140, 250. 140, 250.
140.
140,250.
Deferred tax credit. 140,250. This is what I will not pay. Started now. I have assets, no liability, in a certain financial position. Started. Deferred tax assets. My brother, do you understand now?
Yes, I get it now. I get it now.
No matter how it comes, you interpret it. Now let's
Yeah.
have it.
Thank you very much.
You are welcome, sir. Any other question before? Don't forget, this one is not part 2 when you are reading. Now, look at it. Question 6, the B part of the question. Said, the deferred tax, let's go to the requirement. What amount of deferred tax movement is presented together as a line item in the state line item with the current tax movement in the P or L? What will come to my head? Deferred tax credit or deferred tax income or deferred tax expense or charge? And what will be the current amount of the deferred tax in the state of financial position? Look at the question. B part only. Question 6. Deferred tax asset balance and the deferred tax liability balance of Sanford PSC were 80,000 and 6,000 as at 1st January opening balance, which is the closing balance of last year. That's okay. Deferred tax balance as at 1st January 2018. He has a deferred tax liability of 96,000. An asset, deferred tax assets of 80,000. So he has 16,000 as at the beginning of the year. Now see what he said. So the deferred tax movement as follows in the year ended as well December 2018, deferred tax income. So deferred tax to POL now. Deferred tax movement to POL said he has deferred tax income. So if they don't call it income, they say credit, 10,000. He has a deferred tax expense, which is charge of 30,000. How much will go to the POL? 20,000. This is how much will go to the POL. What will now be at the end? Deferred tax balance as at 31st December 2018. Opening balance of 16,000. Charge of 20,000. That's all. That is all. We later talk about charge or credits, P or L. Another name for charge, expense. Another name for credit, income. Okay, no question. Let's go to question 5. Try solve like for that next week, like 20. Now we understand. Let's go to question 5. This solution is part of the book. So, question 5. A, distinguish between two perspectives of identified different tax balance in the financial statement. To identify different tax, we have two methods. Two ways of solving different tax problem. One way, one method, two methods. We have liability method and we have the deferral method. For liability method, how do I know? It makes use of item, which is the popular method. Make use of item in the P&L, item in the statement of financial position. While deferral method make use of items in the P&L. So let's go to the second one. That is that. This one, they will give you the carry amount, you will determine the tax base. They will give you the carrying amount. You will now determine the tax base. What is the requirement? Say, compute the deferred tax provision which is required as 31st December 2017 and charge to profit or loss for the period in accordance with IAS 12. Charge to profit or loss for the period in accordance with IAS 12. Good. He told me, as first of all, determine, he has given me those items. And I say, okay, this is not here now. Series of items. Say items, carrying amounts, tax base, temporary difference, tax rates, deferred tax liability, deferred tax assets. Now comments, okay. Item, PPE, given in the question. What is the current amount of the PPE? 250,000. They give me tax base? Yes. 218,750. Has he created a temporary difference? Yes. Has it created a temporary difference?
Yes.
Minus 218. This will give you 31,250. What is the tax rate? Let's check.
30%.
The tax rate is 30% for 2017. And we are doing for the end of 2017. The government has not announced. As the government has not announced the increments in the petrol to 1,000. We see we buying it as normal rate. So 30%. Then maybe next week we will do if the tax rate changes, what effect does it have on our book? Okay. I will now multiply with the temporary difference and interpret. When the current amount is greater than the tax base, it will lead to what?
Liability.
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 Liability of how much?
9375.
5. You call it? Are you sure the figure is right?
9375.
Huh?
9375.
9375. Oh, go again. Trade receivable. They've given me the tax base, the carry amount. They will not give us the tax base. 62,500. What is the tax base? They've not given us. Who can tell me the tax base? Who can tell me the tax base? I hope you have not slept. You cannot tell me the tax base, no problem.
It's there. It's not 68,750.
Eh?
No.
What do you call it?
62,500.
Look here.
I think it's simple.
Measurement principles in determining tax base. Another way the thing can come is just about 8 ways. Measurement principles in determining tax base.
68,750.
What do you call it?
68,750.
Good. You are correct.
Thank
Look
you.
at the measurement principles in determining the tax. They will only give you the carry amount. You will not use the measurement principles to determine the tax base. How? If an item in the financial statement is taxed on cash basis, the tax base will be 0. If it is on cash basis, the tax base will equal to what? 0. Let's go to the question. Is there anything that is taxed on cash basis? We go to the additional information 2. Interest is on cash basis. So the tax base will equal to what? 0. 2. If an item in the financial statement has already been used in arriving at the taxable profit, the carry amount will equal to the tax base. It has already been used in arriving at the taxable profit. The carry amount will equal to the tax base. That's true. Number 3, if an item in the financial statement does not have tax consequence or is not deductible for tax purpose, the carry amount equals to the tax base. Is there any items here that is not deductible for tax purpose? Let's go to additional information 4. Fines are not tax deductible. The carry amount will equal to the tax base. And lastly, the application of accounting principles together with the principles of the tax law to determine the tax base. That is what you have used to get 68. Now, I will not be, if I'm doing tax base, I'll be assuming the position of what? Tax person. If I'm determining the carry amount, I'll be assuming the position of what? An accountant. That is rule 4. You must know these measurement principles to be able to answer this kind of questions. Look at it. If you look at the question, note 1. The trade receivable balance amount to the following. The balance 68,750. Down to debt 6,250. There is nothing concerned tax person. Application of accounting principles with tax law. Who use down to debts? Accountants. Does it apply to tax people? They say Ubanu. It does not concern us. Why do you give him loan when you know it's going to go bad? So, what will be the temporary? What will be the tax base now? 68,750. Has it created a temporary difference? Yes. What is the temporary difference he has created? 62,6250. You see a deferred tax liability or deferred tax asset? I will interpret. Say deferred tax liability or deferred tax asset. Don't forget, when the carry amount is less than the tax base, it will give me what? Deferred tax asset. How much is the asset now? I mean, people have slept today.
Why, yeah.
I mean, you are here.
1875.
Okay, good. Yes. 1875. That's all. It's an asset. I'll go to the next one. Interest receivable. They will give me the carrying amount. 1,250. But note 2 says interest either receivable or payable is taxed on cash basis. So what is going to be the tax base now?
0.
0.
1,250. See a deferred tax liability or deferred tax assets?
Deferred tax liability.
Liability of how much now?
375.
375. Next.
Payables.
Payables, other payable, we have fines. How much is the fine? The current amount of the fines in the book? 12,500. The information on the fines. Fines are not tax deductible. When they are not tax deductible or they don't have tax consequence, the current amount equals to the tax base. No temporary difference. Next.
Interest payable.
How much is interest payable?
25.
What will now be the tax base?
0.
0.
See a deferred tax liability or deferred tax asset.
Deferred tax
Deferred
liability.
tax liability.
They play. Payable is a liability.
Asset.
Asset.
Payable is a liability. Money is going out of our hand. Is 0 and minus 25. Which one is greater? 0. Asset of how much now?
750.
750.
That's all. With this now, I'll now sum. What is the figure?
Asset 2625.
Asset 2625. Let me take it back. Two six. Then liability. Nine three seven five plus
9750.
97.
50.
50.
50.
So with this, as at what does it give us?
7125.
7125. The one that goes to the POL. They give me opening balance of the factors.
Yes.
What is the opening balance?
15.
15. What do you call the opening balance?
15.
Closing. Seven one two five minus 15.
5625.
5625.
5625. Who is it? Any issue? When are we supposed to end the class?
11 o'clock.
11 o'clock?
Yes, sir.
No. Any issue? Let's go to I'm coming. Question 7. Let's take this kind of question again. Question 7, blue bubbles. Give me 3 minutes. Question 7. Question 7. Blue bubbles. Limited is a public limited entity in the process of finalizing its financial statement for the year ended at the 1st of October. Let's go to the requirements. Comments say compute the relevant temporary difference and the deferred tax accounts at 31st. I'll go to the question. No issue. Items. Inventory. The following information has been assigned for the accounting record for the purpose of estimating the deferred tax balance. Inventory is stated in the financial statement at lower of cost and net realizable value. The company wrote down the inventory by 120 to a net realizable value of 130. Carry amount. What is going to be the tax base? Yeah, tell me. What is going to be the tax base? Yeah, tell me.
250.
What do you call it to, sir?
1250.
Exactly. Who use net realizable value? Accountant, carrying amount. According to IAS 2, it's low of cost on net realizable value. That means you say you have written it down to get 1130. Net realizable value. So what is going to be the cost?
1250.
This is what it's saying. Has it created a temporary difference? Yes. 120. What is the tax rate? Is it given in the question? Let's go.
30%.
See a deferred tax liability or deferred tax assets.
Asset.
Asset.
Of how much now?
What tax of 120.
Hmm?
120.
Well,
Okay, sorry. It's supposed to be 30%. So
36.
that's
what
36.
instead of 120?
That's 36.
36.
Yes, sir.
Trade receivable. Trade receivable require amount of 450 after making a general provision of a doubtful debt of 30. Trade receivable carry amount of 450. What is going to be the tax base now?
For it.
Because provision for doubtful debt is not recognized. 48.
The temporary difference is 30.
See a deferred tax liability or deferred tax assets.
Asset.
Deferred tax asset.
Asset of how much?
9.
9.
9. Who won? Between the who can England win?
England.
They won. Next,
England will carry that cup last.
property plant and equipment has a carrying amount of 3050 PPE. Has a carrying amount of 3050 and tax base of 2750. During the year end, the tax base of 2001, property was reviewed upward by 150. What is the carrying amount and what is the tax base? Tax base is clear, 2750. What is the carrying amount?
3-2.
3,200.
What do you say?
3,200,000.
3,200,000. They play. People just want to trap us. They've given me the carrying amount at the end. Look at the information up. The following also boss me test the probability of analyzing financial for the end of October.
Oh, they've given us, yeah. Oh, so
Yeah,
it
not
includes
so.
the revaluation.
It's at the end, but the evaluation happened at what? During the year.
It has
Okay.
happened already. You are right, oh.
Okay.
That means the asset was 29 before. As at the beginning of the year, they revalued it here. That is it.
Okay.
Has it created a temporary difference?
Yes, it has.
What is the temporary difference?
300.
Huh? 300.
Yes, sir.
See asset or liability. Say the different tax liability or different tax asset. Liability
Liability.
of how much now?
90.
That is all.
No.
Next. I will go there.
Development
Which one is the
expense.
next?
Development
During the
expenditure.
year 31st October, development expenditure amount to 480. 480 was capitalized. Amortization of 20 was charged to profit or loss for the year. So for the development expenditure, what is the carrying amount?
Carrying 480.
What is the carrying amount?
480.
480. They play. They play. Does not say carrying amount. It said during
Okay,
the
it was
year you are
charged.
using it.
It was net amortization.
You were saying during the year. 480 does not say carry amount at the end of the year.
460. 460.
Where did you see?
460.
We remove amortization of 20.
Tax base 480.
The explanation was allowed for tax purpose in the full year, in full during the year. So what is the tax base?
480.
480.
They play. Just they play. Talk better.
Amortization is not tax deductible.
The rest also. They say developer expenditure is given in full in the year of purchase. What would that be the tax base? Let me give an example. You bought an asset, 100,000. You charge depreciation, 20,000. They say they grant you 100% of the capital allowance in the year of purchase. What will be the tax base? Let me repeat again.
460.
You buy an asset worth 100,000. You charge depreciation of 20,000. But the tax people say they will give you 100% of the cost of the asset on the year of purchase. What is going to be the tax base?
0.
100.
Eh?
0.
Zero. Read the English again. See, the year you incur the development expenditure, we are going to give you everything for free. Everything for go and use it against your hand. We are still coming there next week. You will see the movement to where we are going to calculate current tax, deferred tax, everything in a question. You say in the year of purchase, development expenditure is given in full. What will be the tax base?
480.
There will be no tax on it.
Huh?
That is 460, Nabi.
He said you are making a mistake. You must get it.
It'll be 480 now.
How is it going to be 480? Tell me. How is it going to be 480?
I think it's 0. I don't know. But if
You
it's
must
0,
get
it
it.
leads to what?
Look at the carry amount. Say, oh, development expenditure. The carrying amount, tax base. 480. We remove amortization.
20.
480. He said they grant everything. Go and use it against the profits. What's it going to remain? I
0.
can't going to have a record. You are not getting English. They say make use of everything. I see 480. That's all for me. Say we are granting you everything in the year of purchase. We are telling you, tell me, I see 460. That you are saying 460.
The guy said 0 later.
After you have said 480, you now say 0. I mean. Get the logic. We have granted you everything. We have told you to make use of all the money that you spend on development expenditure. So the tax base will become 0. In short, you are going to take assignment this night for your poor performance. $460. Say deferred tax liability or deferred tax asset. Say deferred tax liability or deferred tax asset.
Liability.
Liability.
Liability of how much now?
Liability of 138.
138.
128.
338.
3.
1.
38.
Next. Trade receivable. Trade and other payables are carried at 600 million, including the payables and accrued expense of 100 million, which related expenses are deducted for tax purpose on cash basis. What is the carrying amount? Trade and other payable. Carrying amount is 600. Based on the question, are carried at 600. What is the tax base now? What is the tax base?
Dash.
500.
Huh? What is the tax base?
Cash paid basis.
What is
That's
the
that.
tax base? Some people is typing, let me check.
It's tax-based basis. Okay.
Ayo says 0. Somebody says 0.
Yes, because it's cash paid basis.
0, Abi.
Cash
It's
basis.
500.
0.
Eh? Why do you take 0?
Because of
The
what you told
cash-based
us.
basis is the accrued expenses alone, not the
Somebody
entire
is talking.
liability.
You are telling me somebody is talking now. They not say all the figure is cash basis. Read the grammar now. See, Mr. Kazim has told us everything cash basis 0. Not be me and you. Read the question. He said out of the 600, only 100 is on cash basis.
Okay.
Said, included
Okay.
in other payables are accrued expenses of 100, whose related expenses are deductible for tax purpose only on cash basis, only 100 out of this 600.
Okay.
Deferred tax liability or deferred tax assets.
Liability.
Asset.
No, no,
liability.
asset, because it's a liability. Asset.
This man don't get this well. This man don't get them
Okay,
well.
don't worry, we'll get it.
So an asset. Which one is bigger out of these two?
600.
Yeah. How can minus 600 bigger than minus 500?
Oh. Okay.
%. Say river tax liability or river tax asset.
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 Asset of how much?
30.
30.
30.
Yes, I'll just sum it up. 90 plus 138. Ninety plus 138.
Wait.
90 plus 138.
228.
Huh?
228.
36 plus 9 plus 30.
75.
So with this, I can now divert tax balance. That's what. Which shall we doing? Divert tax balance. That's what. 31st October. Just come here. Divert tax liability. Divert tax assets. Oh. 228 minus 75.
153.
Huh?
153.
That's the end. It does not say I should take the one that will go to the POA. Just say compute the relevant temporary differences and divert as account as at the first of 2021. That's all. Although he give me the opening balance of diverters, it will be 272. He does not tell me to do that. So this is how far we are going to take. God grace.
What are we doing next week?
Next week, this same time by God grace, let me send you assignment.
Okay, we're still doing deferred tax next week, huh?
What is it?
Now, I'm just curious that are we still continuing with deferred tax next week, or are moving
We
on
have not done
to
anything now. As he going to do? Go to question we are going. This kind of go to page. No question. Go to question. They will move up. Okay, go to questions 16 and 15. 15 is for calculation of current tax. That one is simple. Go to question 16. Look at the requirements. And they will lump everything together. Identify the tax base and the temporary event for each of the items given. Calculate the current tax for the year ended 2016. Calculate the income tax provision required and calculate the income tax assessment for the year. This is a kind of question. And when we are to ignore divert tax to compute the income statement, you see about 4 ways. Then the theory part, those exceptions. Or can you do all those ones? You leave it so that I can move to the next thing.
Oh, cannot do.
Okay, see you next week. Have a wonderful night rest.
Thank you.
So you can call me or chat me for the things that is not clear to you. Elvis. I know
Ah,
Elvis.
yes,
Ah,
sir.
ah.
Well done, sir. Good to sir.